Today is 21st of March 2018. Market trade a narrow range bar with below average volume. Dow 2 point to close at 3511. Now after a severe sell down, market experienced a couple of swing, and with each successive swing getting smaller. So if you take a close look, this is a triangle consolidation patterns. We'd like to see the market break on the upside, as we are generally biased towards up rather than down. Purely because actually markets has been actually trending upwards, and they are still trading above the major moving averages, the 50, the hundreds, and the 200s. Alright, so during consolidations, we do expect the volume to taper off and look for the eventual break on the upside. So again, unless there's something drastic happens in the markets, we are still biased towards the upside. We see similar patterns in the US. We look at the Dow Jones Industrial Index on the weekly charts. Now I mentioned before that if the market were to break this upper channel line, it's likely to actually embark on an accelerated move, and this is what we have seen. And usually accelerated move will have deep correction, and we saw that happening in February. Very strong corrections, and notice it's extremely swift, and they managed to test these upper channel lines and it bounced off. Now notice there's a series of overlapping bars. This is a sign of consolidations. Alright. If you take a close look on the daily charts, you notice you do a couple of swings, like what we've seen for the Singapore STI. Now this is S&P 500, it's quite similar patterns, accelerated move and then followed by deep corrections. In this case, it managed to actually test the 200 days before it actually rejected it, and right now a series of overlapping bars. Volatility has increased, quite evident from the average true range. So again, if the 40 weeks or 200 days moving average hold up well, market is likely to actually be bullish than bearish. Let's turn attention to the Singapore markets today. The dynamic band trigger, we have two stock that was trigger. This is Bukit Sembawang. Now this stock may not have very high liquidity, so we have to be careful. Again, by looking at the chart pattern itself, it's not very impressive. First, we don't have very nice build up. That's one thing. And over here we have a couple of gaps. This gap here is very significant. Gaps serve as a resistance. So notice it didn't close well. Alright, so again, we should try to avoid with immediate overhead resistance. Now you have taken these trades, the stop loss we place one tick below this breakout bar low, and the fact it didn't close well is likely to become range bound. So we like to see eventually whether you can take out this high here of 632. Alright, now if you take up this high with high volumes, we can actually take the trade, but it's more likely to be here and run because we do have some overlapping bar here. So this is a congestion area here, which poses a resistance to the upward move. We have another stock, Sinhai E, which is a trigger for shorts, but this stock itself is below 10 cents, so technically it's not very worthwhile looking, but we take it as a case study. So notice today break itself has increased volume, so generally there is some selling. Previously we do have a trigger as well. Alright, and the stock eventually moves sideways, closing up, and eventually trade above the band and into the box. So if we have taken the trade here, it's the time to actually get up. Now let's turn our attention to some of the recent stocks as case study. The very obvious one is Creative. Over here on the 23rd of February, we have a very nice break. Notice the high volume, and there was a follow through before a pullback happens, and it continues to move upwards. Now over here we have a $5 range, and obviously it's an extension bar, so we should take some partial profits, and the next day with the reversal bar we exit the positions. Right now the stock is actually trading below the dynamic band, so it's actually not worth watching at the moment, but we like to actually just see how it turns out. After period of consolidation, it may well move our game. But it will take some time. It is $10 psychological resistance, not easily taken out. Westward. These stocks were actually trading sideways, and there was a trigger to shorts before it actually turned around. Alright, quite aggressively. Notice over here the trigger happens on the 27th February, and managed to move up and clear the resistance. And over here itself we have a wide range reversal bar. So again here we could have taken some partial profits, managed to actually trade inside but without violating the lower band. And right now is tagging the lower bands but managed to reject the lows, generally positive. The fact that it's actually running up for quite some times, the odds of a correction is pretty high, so we just have to be careful and watch it closely. So you have this position, you got to just take note of that. If it actually closes below the band, probably it's time to get out. UMS. Now over here we have a break followed by a gap up against a series of up bar above the band, and this is a wide range reversal bar, and here we exit our positions. So pretty simple trade. This is Mentec. Now over here we have a break if you take a close look, it's a very nice saucer patterns, and they were built up over here as well. Unfortunately there was a reversal bar the next day, slightly lower volume, and the stop loss at one tick below this breakout bar is still intact, and the next day it traded a narrow range bar. So we notice actually going through a line, so it just showed that volatility had dropped off before it staged up another breakout. Alright, and this time here there were a very nice follow through, trading well above the band with daylights, and this is the reversal bar. Again here we could have taken some partial profits. Notice begin to move in, and here it trade below the lower band with increased range, so it's a time to actually exit the trade. Again, wait for it to finish consolidation and we see whether the stocks can break on the upside. Venture. Now Ventures over here, it actually broke this resistance here, the previous high here, very nicely with increased volume. So again, you've taken the trades, stop loss will be one tick below the breakout bar lows, and it followed through very nicely. Over here, when the stock closed clear, we could exit partially, and next day with a reversal bar, we could exit our position. Alright, in the worst case, you will have to actually get out over here. Right now, the stock is actually more range bound, and even though there's slight upward move, but generally it's not moving as aggressive as before, so it's actually losing momentum. So again, we see how if we actually can trade sideways, we look for eventual break on the upside. One of the stocks we have not seen for quite some time is actually Costco, because it actually went through a period consolidation. It's very obvious, you can see swing gets smaller. This is a triangle consolidation breakout, and immediately this extension bar followed by pullback to be expected. So if again you have taken a trade, stop loss one tick below the breakout bar low, and just manage it accordingly. This is AirPack Reality. Here we have a break, and stocks actually tag the lower band. Here we can hang on to the trades and look for violations because the volume is low. It shows that there's no panic selling. Managed to recover over here. Notice the increase in volume, generally nice. And again, taking the lower band but managed to bounce off. Here we have an extension bar. So here you probably towards the close take partial profits. The next day we have some uncertainty. This is a long deck doji. Again, it gives you early warning, and followed by reversal bar. This gap itself, you probably exit all the position. Alright, and stocks actually trade sideways, and here over here itself we have re-entry on the 21st of February, and they actually move up quite nicely before you tag on the upper band and go into the box here. Here we can exit the position. Among the bank stocks, DBS is actually more tradable. Notice over here the stock managed to clear this recent high here, and that was exactly the day we have a DB trigger and move upwards. Notice the daylight, and the daylight began to close out over here, so that's a sign of first weakness. We can take partial profits, and over here we exit the trade. Stock right now is doing a retracement. Now just think of some of the oil related stock. This is Semcott Marine. Notice over here itself we have very strong move. We have taken the trades as handsomely rewarded, and here we have wide range reversal bar. We can exit some of the positions, and over here again we have one big bar, and we get a trade below. This is obvious. Should get out the remaining position here. All right. And right now it's actually trading inside a box, so it becomes range bound. Technically, there's not worth watching at the moment. Capital call is a bit unusual. If you recall, there was a fine of $500 million and its stock gap down, managed to recover. The fact that it managed to recover, it does show that this is discounted. Alright, but the DB triggers happen on this day when it break this resistance, which coincide with our congestion box top. It managed to move up, and notice over here it trade into a line. Alright, but the fact that it's actually trading above that, that's generally okay. And here we have a very nice break again on the upside. It's a very big range, high volume, generally healthy, followed by a pullback to be expected. Managed to move up again, and over here, this 3 bars here that show this sign of weakness. All right, because this small body that shows some uncertainty after this gap down here, and this upward move is actually quite weak. In particular, this bar here when it reject the low and close below the band. We could exit the position here because there's a lot of uncertainty. Worst case, that will be the place where you get up. Alright, and this stock right now are just trading sideways. Now generally there are very few stock to shorts, and it is perhaps better to long than short, because markets during the consolidation phase will still have some strong stock moving upwards. So these are still tradable. Again, we like to wait for the market to finish consolidations, and if the US policy generally positive and the interest rate hike has not quickened, the Federal Reserve do not quicken the pace of the interest rate hike, they'll be generally more positive for the markets going forward.